to the Lifeboat Financial Group podcast, where we talk about protecting your family, your home, and your future with real world strategies that actually work. I'm your host, Antonio Yarbro, Navy veteran, former VA employee, and now a mortgage protection specialist, helping families all across the country keep the roof over their heads no matter what life throws at them. Now, today's episode is one that I've been wanting to record for a long time because it's the most misunderstood and honestly the most powerful part of modern life insurance. We're talking about living benefits, not death benefits, not money your family gets when you're gone. I'm talking about money you can access while you're still alive when you need it most. If you own a home, if you have a family depending on you, if you've ever wondered what happens if I get sick or injured and can't work, well, then this episode is for you because the truth is this: most people don't die too soon, they live too long and get sick along the way. And that's where living benefits change everything. So grab a coffee, settle in, and let's break down how living benefits work, why they matter, and how they can literally save your home. All right, let's jump into something most families never really stopped to think about. And honestly, it's not their fault. Nobody teaches this stuff in school. Your job doesn't explain it. And most financial conversations happen only after something bad has already happened. When I sit down with homeowners, I always start with one simple question. And it's not meant to scare anybody, it's meant to get them thinking realistically. What's more likely, that you die early or that you get sick or injured and cannot work for a while? And every single time people pause, not because it's a trick question, but because deep down they already know the answer. Here's the part that most people never hear. Statistically, you are far more likely to experience a heart attack, a stroke, cancer, a major injury, a chronic illness, or suffer a long recovery period than you are to die unexpectedly. And I'm not talking about old age stuff. I'm talking about things that hit people in their 30s, 40s, and 50s, right in the middle of raising kids, paying a mortgage, building a career, and trying to get ahead. Now, here's where the conversation gets real. Your mortgage company doesn't care. They don't pause your payments. They don't say, hey, take your time, get better. We'll wait for you. Nope. They want their money every month on time, no excuses. And if you cannot pay, they will take the house. It's harsh, but it's true. I've seen it happen more times than I wish I had. Families lose everything, not because someone passed away, but because someone lived and got sick. Think about that for a second. You survive the heart attack, you beat the cancer, you recover from that injury, you do everything right, you fight, you heal, and you push through. But while you're recovering, the bills keep coming. The mortgage keeps coming. Life keeps coming. And that's the gap living benefits were designed to fill. They're not about what happens when you die. They're about what happens when life hits you hard while you're still here. They're about protecting the home, the family, the stability during that exact moment when you're most vulnerable. Most people don't realize this until they're in the middle of a crisis, and by then, it's too late to put protection in place. That is why this conversation matters. That's why living benefits matter. And that's why we're talking about them today. Alrighty, now that we've talked about the problem, the real life gap most families don't even realize exists, let's break down what living benefits actually are, because once you understand this, everything else starts to click. So here's the simplest way to think about it. Traditional life insurance, the old school kind, it only pays out when you die. That's it. You're gone. Your family gets a check. End of story. But modern life insurance has evolved. It's not just about death anymore. It's about life. It's about dignity. It's about what happens while you're still here, still fighting, still recovering, still trying to keep your household running. Living benefits are features built into many modern policies that allow you to access a portion of your death benefit early if you experience a qualifying illness or injury. Now, let's make this practical, right? What counts as a qualifying event? We're talking about things like a heart attack, stroke, cancer, organ failure, a chronic illness, critical injuries. And depending on the carrier, there may be even more conditions covered. Now, these aren't rare events. These are the exact things that disrupt people's lives every single day. And here's the part most people never hear. When one of these events happens, the insurance company allows you to accelerate part of your death benefit, meaning you can take some of the money now while you're alive, instead of your family waiting until you pass away. Now, this isn't a loan. There's no interest, there's no repayment, and it's not like disability insurance where you have to prove you can't work. This is your money paid out tax-free with no restrictions on how you use it. You can use it for mortgage payments, medical bills, time off work, childcare, travel for treatment, home modifications. You can use it for groceries. You can use it for keeping the lights on. It really boils down to you can use it for whatever your family needs. There's no rule book. There's no approved expense list. There's no one checking receipts. And here's the part that surprises people the most. Living benefits are included in many modern policies at no additional cost. Right? You don't have to buy a separate policy. You don't have to add a bunch of expensive riders. You just have to choose the right kind of policy from the right kind of carrier. Most people don't even know they exist because nobody ever explained them. But once you understand them, you realize this isn't extra. This isn't a luxury. This is a core of real financial protection. Because life insurance shouldn't just protect your family when you die. It should protect your family while you live. Now that we've talked about what living benefits are, let's make this real. Because concepts are great, definitions are great. Who doesn't love them? But nothing hits home like actual scenarios. The kind of situations I see every single week when I'm talking to families. Now, these aren't dramatic movie moments. These are everyday people, people just like you. People who woke up one morning thinking it was a normal day, and by the afternoon, everything had changed. So we'll walk through a few examples here. Now, picture this. You're 42 years old. You're healthy. You're working. You're providing for your family. You're doing everything right. Then one day, out of nowhere, you have a heart attack. Now, you survive. You're grateful. Your family is relieved. But now, you're out of work for 3 to 6 months. And here's the part nobody prepares for. Your income stops. but your mortgage payments don't. The hospital doesn't say, hey, don't worry about your bills. Your job doesn't say, hey, take unlimited paid time off. Life doesn't pause. With living benefits, you can accelerate 50,000, 100,000, and sometimes even more depending on your policy and your diagnosis. Now, that money becomes your financial life raft, your lifeboat, if you would. It keeps your family afloat while you recover. It buys you time, and time is priceless when you're healing. Now, here's another one I see all the time. All right, you get diagnosed with cancer, and suddenly life becomes a schedule of appointments, treatments, specialists, and second opinions. All right, you're not thinking about work, you're thinking about surviving. But the bills don't care about your diagnosis. Your mortgage, it doesn't care either. Your utilities, they could care less. Living benefits give you breathing room. They give you the ability to focus on healing instead of stressing about how you're going to keep the lights on. And let me tell you, the emotional relief that brings to a family is something that you cannot put a price on. So maybe it's not a heart attack. Maybe it's not cancer. Maybe it's an injury, a car accident, a fall, or a surgery that takes longer to recover from than expected. Even if you have disability insurance, most policies only cover a portion of your income, usually 40 to 60%, and that's before taxes. Try paying a full mortgage on half of your income. It doesn't work, does it? Living benefits fill the gap. They give you access to money when your income drops or disappears. Now, this is a big one. This is the one that ties everything together. Your mortgage is your biggest monthly expense. Well, hopefully. It's the one bill you absolutely cannot fall behind on. If you miss a few car payments, they take the car. If you miss a few credit card payments, they hit your credit. All right. But if you miss mortgage payments, you lose the home. Living benefits are designed to protect the home first. They're built to keep your family in the house while you recover, heal, or get back on your feet. This is why mortgage protection policies with living benefits are so powerful. They don't just protect your life, they protect your lifestyle, your stability, your family's sense of normalcy. Because when life hits hard, the last thing you should be worrying about is whether you're going to lose your home. If this feels right and you want to think about it more, that's okay. Now, here's the part that still blows my mind. And honestly, it frustrates me a little because it doesn't have to be this way. Most people don't have living benefits, not because they're expensive, not because they're rare, and not because they're hard to qualify for. Most people don't have them for one simple reason. Nobody ever took the time to explain them. That's it. That's the whole story. So let me break this down because this is where the educational side of this really matters. A lot of agents out there, and I'm not knocking anybody, I'm just being real. They don't talk about living benefits. And there are a few reasons for that. Some agents don't understand them. Living benefits are a part of modern life insurance. They're newer, they're more advanced, they require training and product knowledge, and not every agent invests the time to learn them. Some agents only sell old school policies, right? There are still some companies out there pushing policies from the 1980s and the 1990s, policies that don't include living benefits at all. If an agent only represents those companies, well, guess what? They're not going to bring up living benefits because they cannot offer them. Some people assume they don't need them. I hear this one all of the time. I'm healthy. I don't need that. Where I'm young, I'll be fine. I've got insurance through work. I'll deal with it later, right? And I get it. Nobody wakes up excited to talk about life insurance. But here's the truth. Your job doesn't owe you anything. Your benefits can change. Your coverage can disappear. And if you leave your job, voluntarily or not, you lose everything. Employer coverage is a temporary item. It is not portable, it's not guaranteed, and it almost never includes living benefits. People think it's going to be expensive. This is one of the biggest misconceptions, right? Most people assume that anything extra in insurance must cost more, but living benefits are included in many modern policies at no additional cost. You're not paying extra for them. You're just choosing a policy that's built for the world we actually live in. So this part really hits home for me and a lot of other people. They weren't given a choice. They weren't educated. They weren't shown the difference. They were handed a policy and told this is what you need. But here's the truth. You deserve to understand your options. You deserve to know what's available, and you deserve protection that actually works in real life. Living benefits give you portable, permanent protection that follows you wherever you go. Your job changes, career shifts, you move, deployments, everything. They're not just a feature, they're a safety net, a lifeline. They're the difference between surviving a crisis and surviving a crisis without losing everything you've worked so hard to build. And most people don't have this simply because nobody ever took the time to explain to them in a way that made sense. That's why we're having this conversation now. All right, now that we've talked about what living benefits are and why they matter, let's get into the part that confuses most people. The different types of policies that actually include these benefits. And don't worry, I'm not going to throw a bunch of insurance jargon at you, right? We're going to break this down in plain English, the way someone should have explained it to you years ago. There are three main types of policies that include living benefits. Each one has a purpose, each one fits a different kind of situation, and understanding the differences help you make a smart, informed decision. So let's walk through them, right? First, you've got term insurance with living benefits. This is the one most homeowners end up choosing, and it's for a good reason. Here, it's an affordable, it's simple, and it does exactly what you need it to do. Term life covers you for a set period, right? Usually 10, 20, 30, or even 40 years. Now, during that time, if something happens to you, whether you pass away, you get hit with a qualifying illness, the policy pays out, right? Why do people love it so much? It's the most affordable option. You can get high coverage amounts for a low cost. It lines up perfectly with your mortgage timeline. It includes living benefits with many modern carriers. And if your main goal is protecting the home, protecting your income, and making sure that your family doesn't lose everything if life blindsides you, well, term with living benefits, that's kind of the sweet spot. It's the workhorse for mortgage protection insurance. Now, now let's talk about the IUL, the Index Universal Life Policy. This is one that is interesting for people because they hear the word permanent, right? and they think it's guaranteed to last forever, no matter what. And I want to clear that up in a real honest way right now. An IUL is designed to be permanent, but like anything in life, it depends on how you take care of it. An IUL is a type of life insurance that can last your entire life, but its longevity depends on a few moving parts: how consistently you fund it, how the market index performs, how the policy charges and fees behave over time, and whether you adjust it as your life changes. So, yes, it is built to be long term coverage, but it is definitely not a set it and forget it policy. It's more like a long term financial tool that works best when you check in on it occasionally, just like you would with a retirement account. Now, here's a few other reasons why people do like IULs, right? They build cash value over time. Now, that cash value grows based on a market index such as the S&P 500. You get the upside potential without the downside risk, right? You can use the cash value later in life for retirement income or emergencies. And of course, modern IULs also include living benefits. You know, people like to choose IULs when they want something that offers lifelong protection, like I said, if managed properly, builds a financial asset, and provides a tax advantage growth fund, and gives them flexibility later in life. Now, it's a great option for someone who wants more than just coverage. They want strategy, flexibility, and long term planning built into the same policy. But all I'll say this, all I'll say clearly is this, because most insurance agents don't. An IUL can last your entire life, but if it is not funded correctly and reviewed occasionally, it's not magic. It's not an automatic. It's a tool. And like any tool, it works best when you use it the right way. For the right person, it's a powerful tool. For someone who wants something simple, hands off, term might be a better fit. Now, whole life. Now, let's talk about whole life, right? Here's the conversation that most people end up having. Why should I get whole life? It's a simple, steady, and permanent policy, but does usually cover a smaller amount, right? Well, whole life policies are permanent, meaning they never expire as long as you pay the premiums. They build guaranteed cash value over time, and they're often used for final expense planning. When you add living benefit riders, whole life becomes a solid option for covering burial and final expenses, leaving a small legacy, having lifelong coverage, getting access to living benefits on a smaller scale. This is great for people who want something permanent but don't need a huge amount of coverage. So which one of these is best, right? And here's the honest answer. It really depends on your goals, right? But for most homeowners, especially people focused on protecting their mortgage, term with living benefits is the most practical, affordable, and effective option if they can be approved for it. It gives you high coverage, low cost, living benefits, protection during your highest risk years, and peace of mind without breaking the budget. And if you want something permanent or something that builds cash value, that's where an IUL or a whole life policy comes into play. The key is understanding that you do have options and that modern policies are built to protect you not just when you die, but while you live. All right, now I want to take a moment here and talk directly to my veterans and my federal employees. All right. because this part obviously hits home for me, right? I've been in your world. I've worn that uniform. I've stood on those long VA lines. I've dealt with the paperwork, the delays, that we're still reviewing your claim messages. I've worked inside the VA system and seen firsthand how slow things can really move, even when the situation is urgent. So when I talk about living benefits, I'm not talking to you as some insurance guy reading out of a brochure, right? I'm talking to you as someone who understands the reality of how unpredictable and honestly how unreliable government systems can be when you need help fast. All right. A lot of veterans and federal employees assume, well, I've got VA disability. I'm good, right? Well, maybe. I've got sick leave. I'll be fine. I've got FMLA. That'll cover me. Right? I've got workers' comp if something happens on the job. Right? I don't need this stuff. My agency will take care of me. And listen, those benefits are great. They're important. They're earned, but they're also slow. They're limited and not guaranteed to show up when you need them most. Now, let's talk about each one of these for a second. VA disability. If you have ever filed a claim with the VA like I have, you already know it can take months, sometimes years, and even when it's approved, it may not be enough to cover your mortgage, your bills, and your recovery at the same time. Now, FMLA protects your job, not your income. You can take time off, but you're probably not going to be getting paid for that, right? Sick leave runs out real fast. Ask me how I know. One surgery and one treatment plan, one unexpected diagnosis, and suddenly you're out of hours. Workers' comp only applies if the injury happened on the job. Most major illnesses and injuries simply they don't. All right, now let's be honest here on this one. The government isn't stable. All right, budget freezes happen all the time. Agencies shut down. Congress argues. Paychecks get delayed. Benefits get restructured. You know it. I know it. We've all lived it. We're currently living it. So you cannot rely on government systems to protect your family during a medical crisis. Not because they don't care, because they're not built for speed. They're not built for emergencies. So they're not built for the kind of life that just you got punched in the gut by. These are the moments that living benefits are designed for. Living benefits give you something the government cannot control: speed, flexibility, direct access to funds, and no waiting on approvals or claims backlogs. When something happens, you file a simple claim, your doctor signs off, and you get paid tax-free with no restrictions. No waiting for Congress, no waiting on HR, no waiting on the claims backlog to clear, no hoping someone processes your paperwork on time. This is your policy, your benefit, and your protection. And for veterans and federal employees, people who already deal with enough red tape, that kind of independence honestly is priceless. Now, one of the biggest questions people ask me, and honestly, it is a fair question, is all right, so, okay, Antonio, if I ever need to use these living benefits, how hard is it to actually get the money? Right? And I get why people ask that. We've all dealt with the insurance companies before. We've all had that moment where you're on hold for 45 minutes listening to the worst elevator music in the world, wondering if anyone is ever going to pick up. So let me break this down in a way that's simple, honest, and real. Using living benefits is not like filing a disability claim. It's not like dealing with workers' comp, and it is definitely not like trying to get your VA benefits approved. It's not like arguing with your health insurance about a bill. It's actually one of the simplest processes in the entire insurance world. Now, you can do it in a couple of steps. Step one, you get diagnosed or injured, all right? So this could be a heart attack, a stroke, cancer, major injury, a chronic illness, whatever qualifies under your policy. Step two, your doctor confirms this condition. This usually just, standard medical documentation. You're not jumping through hoops. You're not providing any I can't work documentations or anything like that. You're not fighting with anyone. Your doctor simply verifies what happened. Step three, this is typically a short form, not a novel. Some carriers even let you submit your claim online, but you do have to submit your claim. All right. Step four, the insurance company reviews it. They look at the medical documentation. They confirm the diagnosis matches the policy, and they calculate the eligible benefit amount. All right. This part is usually faster than people expect because the criteria are clear and objective. Step five, you choose how much of your benefit you want to accelerate. Now, this is really important, right? You're not forced to take the whole amount. You can take a little, you can take a lot, or you can take somewhere in between, but you get to stay in control. Step six, you get paid tax-free. Remember, it's tax-free. And here's the part people love. There are no restrictions on how you use the money. You don't have to spend it all on medical bills. You don't have to justify your expenses. You don't have to send receipts. You don't have to prove a financial hardship. It's your money. It's your benefit. You use it for whatever your family needs, whether that's a mortgage payment, rent, groceries, childcare, travel for treatment, replacing lost income, or just simply keeping your household afloat. Whatever matters most in that moment, that is what the money is for. Living benefits claims are some of the most straightforward claims in the entire insurance industry because they're based on medical facts, not financial arguments. There's no prove you can't work. There's no prove you're disabled. There's no prove financial hardship. It's simply, did the medical event happen? Yes or no? Yes? Okay, well, here's your benefit. And that's why living benefits are so powerful. They give you speed, they give you control, they give you options, they give you dignity during one of the hardest moments of your life. You're not begging for help. You're not doing GoFundMes. You're not waiting on government systems. You're not hoping someone processes your paperwork in time. You're using a benefit that you've already paid for, a benefit designed to protect your home, your family, and your future when you need it the most. All right, as we wrap up this episode, I want to leave you with something real and something that I've learned after sitting with hundreds of families, hearing their stories, and understanding their fears, and helping them build protection that actually works in the real world. Your mortgage is probably the biggest financial responsibility that you have, all right? It's the one bill that doesn't care what's going on in your life. It doesn't care if you're sick, injured, recovering, or dealing with something completely unexpected. Your family depends on you, not just emotionally, but financially. And oof, life is unpredictable, right? It doesn't send a warning. It doesn't ask if you're ready. It just shows up. Living benefits are not a luxury. They're not some extra feature. They're something you wait until you're older to think about. They're not something you wait until you're older to think about, right? They are the foundation of real financial protection in today's world. Because here's the truth. And I say this all the time, and I say it with all the respect in the world. Life insurance with living benefits isn't about dying. It's about surviving, and surviving is expensive. Now, if you're listening to this right now and you're thinking, yeah, if something happens to me, my family would be in trouble. Well, then that's your sign not to panic, not to stress, but to take action, right? And taking action doesn't mean buying something today, right? It doesn't mean making a rushed decision. It simply means starting the conversation. Ask questions, get clarity, see what you qualify for, understand your options, and find out what protection actually looks like for your situation. Because the worst time to figure out you need living benefits is when you already need them. Right? I'm here to help you build a plan that makes sense, a plan that fits your budget, fits your goals, and protects your home and your family from curveballs that life throws at all of us. So reach out. Let's look at your options. Let's make sure your family never loses their home because life hit you at the wrong time. Drop a message here in the chat for me, and if you want to learn a little bit more about this. Thank you for spending some time with me. Thank you for caring enough about your family's future to learn something new today. Stay safe, stay prepared, and I'll see you in the next episode. And speaking of the next episode, we're going to be diving into questions that almost every homeowner asks me. How much coverage do I actually need? I'm not going to give you the generic answer, not the one size fits all formula, but a real breakdown based on your mortgage, your income, your family, and your long-term goals. Most people are either underinsured or misinsured, and they don't even know it. So next time, we're going to walk through exactly how to figure out the right amount of protection for your situation without guessing, without overpaying, and without leaving your family exposed. I'll see you there.